It started as an ordinary day in the mid-1970s. I remember Nelson Bunker Hunt gazing out of his Dallas office window shortly after the passing of his father, legendary oil tycoon H.L. Hunt. When H.L. Hunt died in 1974, he left behind a sprawling fortune, billions of dollars in oil wealth to his family, including his sons Bunker and William Herbert. With that inheritance, the two brothers suddenly had enormous financial power. On that ordinary Texas day, as I sipped my coffee, I had no idea that Bunker and Herbert were about to use that power to launch one of the wildest financial adventures of the century. Bunker was deeply worried about the economy. Inflation was roaring through the 1970s. I'm talking double-digit price jumps each year, and the U.S. dollar had been taken off the gold standard, no longer backed by gold. To men like the Hunt brothers, who distrusted government paper money, it felt like the value of a dollar was evaporating by the gold was actually illegal for private citizens to buy at the time, a Depression-era restriction. So the Hunts turned their eyes to the next best precious metal, silver. Silver, they believed, would be a safe haven, a tangible asset that inflation couldn't erode, real money in a world of paper promises. Bunker often said he foresaw at least a tenfold increase in the price of silver due to inflation, and he convinced Herbert that investing in silver was the way to protect their family fortune. At first it started small, or at least as small as things ever got for the Hunts. In 1973, even before their father's estate was fully settled, Bunker and Herbert quietly began amassing silver on a huge scale. I was astonished when I learned how much they were buying. That year alone, the brothers bought over 35 million ounces of physical silver, an absolutely colossal pile of metal. They didn't want anyone to catch on to how much silver they were acquiring, so they shipped the bullion overseas. I'll never forget accompanying one secret shipment. We loaded tons of silver bars onto a chartered plane bound for Switzerland, guarded by a couple of Texans from the Hunt Ranch with pistols on their hips. It was like something out of a heist movie, except we were bringing the treasure somewhere safe. The Hunts had stockpiled so much silver by the mid-1970s that their buying alone was enough to move the global market price. And silver wasn't the only thing the Hunts tried to corner. These brothers were bold and not afraid of making big bets. In 1977, I watched them make an audacious play in the soybean market. Food prices were rising, China was importing more, and the Hunts saw an opportunity. Through various accounts, even involving some of their children, they bought up futures contracts for roughly one-third of the entire U.S. soybean harvest that year. Essentially, they tried to do to soybeans what they were doing to silver, buy so much that they would control the market. Regulators at the Commodity Futures Trading Commission, CFTC, were not amused. The CFTC discovered the Hunts had exceeded position limits by an enormous margin and warned that their excessive holdings threatened to disrupt the market and harm the American public. Under government pressure, the Hunts were forced to sell off their soybean positions and paid a fine of $500,000. Bunker was livid. He vented to me and to the press that apparently the CFTC is trying to repeal the law of supply and demand. In his view, he wasn't manipulating anything. He was just a shrewd buyer. That run-in with regulators only strengthened the brothers' resolve. They felt the government was out to get them, but they weren't about to back down. Despite the soybean setback, Bunker and Herbert's conviction in silver never wavered. If anything, by the end of the 1970s, they were more determined than ever. All the economic trends seemed to validate their theory. Inflation kept surging to new highs, and by 1979, the Iran crisis had oil and gold prices shooting up as well. To the Hunts, it looked like fiat money, paper currency, was in free fall. Silver was their refuge, and they began preaching the gospel of silver to anyone who would listen. I recall meetings with wealthy investors in Europe and the Middle East, where Bunker would passionately explain that silver was undervalued and destined to skyrocket. His charisma was convincing. In fact, a number of other rich families and even some Saudi Arabian investors joined forces with the Hunts, pooling funds to buy more and more silver. With all these allies, the Hunts effectively formed a silver buying syndicate. As a close associate, I was both excited and nervous. We were betting the house on this shiny metal. By 1979, the Hunt's silver strategy went into overdrive. Bunker and Herbert had eased up a bit after their initial 1973 purchases, but now they came back with a vengeance. It was as if a switch flipped. Suddenly they were buying silver at every opportunity. They weren't just buying with cash on hand, they were using futures contracts heavily as well. Every time a futures contract was about to expire, instead of settling for cash, the Hunts insisted on taking physical delivery of the silver. The metal kept piling up in their warehouses and Swiss vaults. By the end of 1979, each brother reportedly owned around 20 million ounces of physical silver personally, on top of even larger positions in silver futures. Even their younger brother Lamar Hunt got involved on the side, though his stake was modest compared to Bunker and Herbert's big haul. Their relentless buying began to send silver prices soaring. I remember watching the price charts in awe. In early 1979, silver had been about $5 or $6 an ounce. As the Hunts and their partners kept scrambling to buy every ounce they could, the market started to realize that available silver was getting scarce. The price of silver shot through the roof. By January 1980, it reached an astonishing record high of about $50 per troy ounce. In fact, in intraday trading, it briefly hit $50.35, which was unprecedented. We had turned the silver market on its head. At one point, the Hunt brothers held approximately 1/3 of the entire world's supply of silver that wasn't held by governments. Think about that. Two wealthy Texas oilmen and their friends controlling a huge chunk of the planet's silver. It was enough to put a gleam in anyone's eye, and it certainly did in Bunker's. As the price skyrocketed, a frenzy gripped the market. Everywhere, people were scrambling to get in on the action or to profit from it. I got calls from folks I hadn't heard from in years, asking if the Hunts would buy their silverware or old coins. Families were pawning heirlooms, selling off sterling tea sets and jewelry to cash in on the high price of silver. In the United States, people dug through their dresser drawers for pre-1965 silver coins, back when quarters and dimes were actually silver, and had them melted down for profit. On the other side of the world, I heard that in India, where brides traditionally receive silver jewelry, women were selling pieces from their trousseaux because the prices were just too tempting. Silver was truly in a mania. Meanwhile, the Hunts' position kept growing in value. With every dollar increase in the price, their silver holdings, physical and futures combined, gained hundreds of millions on paper. By our calculations, when silver was peaking, the Hunts' combined silver position was worth around $4.5 billion. Yet, not everyone was cheering. Industrial users of silver, like photography companies and jewelers, were feeling the squeeze. I recall Eastman Kodak, a big consumer of silver for film, was panicking about costs, and manufacturing firms were angry that this speculative fever was driving their raw material costs through the roof. The situation became so extreme that in late March 1980, the famous New York jeweler Tiffany & Company ran a full-page ad in the New York Times condemning the Hunt brothers by name. In bold letters, Tiffany's ad declared it unconscionable for anyone to hoard several billion, yes, $1 billion worth of silver, and thus drive the price up so high, forcing others to pay absurd prices for silver products. That public slap in the face was a sign. The hunts had made a lot of powerful people upset, from industries to regulators, and backlash was coming. In fact, by mid-January 1980, the hunts controlled roughly 69% of all silver futures contracts on the New York COMEX exchange, an incredible dominance that practically screamed market corner to the authorities. We were kings of the Silver Mountain, but it also felt like we were standing on top of a volcano. Behind closed doors, concern and jealousy were mounting among the financial establishment. I heard rumors that executives at some Wall Street firms and even officials in Washington were exchanging frantic phone calls about the hunts. From their perspective, two wealthy cowboys from Texas, and worse, with some Middle Eastern investors alongside them, seemed to be manipulating the nation's silver supply. Remember, this was not long after the 1970s oil embargo and energy crisis, having the hunts plus some Saudis corner a critical commodity stirred all sorts of anxieties. Something had to give, and soon we felt the full force of the rules change against us. The unraveling began subtly at first. In January 1980, as silver hit its peak, the commodity exchanges decided to act. They issued new regulations, later famously known as Silver Rule 7, which put heavy restrictions on buying silver on margin, borrowed money. In simple terms, they made it much harder to keep leveraging cash to buy more silver. More importantly, the exchange took the unprecedented step of suspending the trading of new long positions in silver. Essentially, no one could buy more futures. You could only sell or hold. This meant the hunts, who were still eager to buy, were suddenly stuck. As one colleague put it, they temporarily changed the rules of the game. With no new buyers allowed but plenty of sellers free to jump in, the price of silver began to slide. We watched in dismay as silver, which had been so buoyant, started falling day after day. At first it was gradual, but soon it was clear that momentum had reversed. Bunker was furious about Silver Rule 7. I distinctly recall him pacing the office, fuming that the exchange and regulators had stabbed us in the back. From his perspective, we had played by the rules and won, only for the rules to be changed once the establishment realized who was winning. Whether or not that's the whole truth, the result was the same. Our backs were against the wall. The hunts had bought much of their silver on credit, loans, and margin, with the expectation that prices would keep rising. Now, as prices fell, the brokers and banks started demanding more collateral. The dreaded margin calls hit, and they hit hard. I watched our accountants shuffle nervously as each day brought another notice that we owed millions more to maintain our futures positions. By late March 1980, the hunts were reportedly paying out millions of dollars a day just to cover margin calls, storage costs for the silver, and interest on their debts. The fortune that had looked so massive on paper was evaporating with every tick down in price. The final blow came on March 27, 1980. That morning, which would go down in history as Silver Thursday, started like any other, but it quickly descended into chaos. Silver prices were in free fall. Our phones rang constantly with panicked voices from New York and Chicago. The hunts had missed a margin call. They simply couldn't pay it that day. It was for a staggering sum, around $100 million due immediately, and we just didn't have the liquid cash ready. Once word got out that the hunts were faltering, the market went into a tailspin. Prices, already down, plunged even further. Silver, which only 2 months earlier had been trading around $40 to $50 an ounce, collapsed to around $10.80 an ounce on that day. It was carnage. The price of silver fell by over 50% in just 4 days, and on Silver Thursday alone it dropped by about 1/3. Other markets shuddered in sympathy. Stocks and commodities all felt the shock as the confidence in the market was shaken. I will never forget the scene in our offices. Bunker, usually the epitome of Texas cool, was on the phone with our brokers and bankers, his face ashen. Herbert sat at his desk, head in his hands, staring at ticker numbers that kept plummeting. I was fielding calls left and right, journalists sniffing around for a quote, anxious partners wanting to know if we were ruined, and even a few death threats from angry investors who blamed the Hunts for wreaking havoc. It felt like the air was sucked out of the room. We were on the brink of ruin. By the end of that day, the Hunts' losses on paper were enormous, around $1.7 billion by some estimates. There was genuine fear in the wider financial world that if the Hunts defaulted on all their debts, they might take down several major brokerage firms and banks with them. After all, a lot of big-name firms had lent us money or were on the other side of those trades. The thought that two brothers could be the domino that triggers a financial crisis was surreal, but in that moment, it was very real. As the dust settled, we realized the Hunts were massively indebted and essentially broke on paper. They owed far more than they could pay in cash. That's when an unlikely group stepped in. A consortium of some of America's largest banks, apparently nudged by the Federal Reserve, hurriedly assembled a private bailout package. I was not privy to all the high-level talks, but I know Bunker and Herbert met with bankers behind closed doors for tense negotiations. In the end, the banks agreed to extend the Hunts a lifeline, roughly $1.1 billion in credit to cover their immediate debts and stop the bleeding. This wasn't done out of charity. The banks were protecting themselves as much as anyone. The loan allowed the Hunts to pay off the most urgent margin calls and obligations, including payments due to the brokerage house Batch Halsey Stewart Shields, which had been our main broker for silver trades. If we had defaulted to Batch itself could have collapsed, potentially setting off a chain reaction. Thanks to the bank group's intervention, a broader financial meltdown was averted, but the Hunts' own empire was effectively shattered. I accompanied the brothers to an emergency meeting with our lawyers that week. The mood was grim. Silver Thursday had crushed their silver empire overnight. Bunker looked exhausted, but even in defeat he mustered some of his old humor, saying to me, $1 billion isn't what it used to be. He had a point. The world had changed, and so had their fortune. In the weeks and months after Silver Thursday, the Hunt brothers' high-flying days were over. Once the immediate crisis passed, the reckoning began. Government regulators and Congress wanted answers, and perhaps some revenge. The Hunts were dragged in front of congressional committees, where legislators lambasted them for wreaking havoc on the markets. I sat behind them during one hearing in 1980, and it was a sorry sight. These two once proud Texas billionaires sitting there in plain business suits, getting lectured by politicians as cameras flashed. They tried to explain that they believed in silver as a hedge against inflation, that they never intended to manipulate the market in the illegal sense. But few in Washington were sympathetic at that point. To most, the Hunts had become the villains who nearly broke the financial system out of greed. Over the next few years, a blizzard of lawsuits and legal troubles descended on the brothers. The Commodity Futures Trading Commission and Securities and Exchange Commission both investigated them. Eventually, in 1988, after nearly a decade of legal battles, a federal jury found the Hunt brothers liable for conspiring to corner the silver market. One major lawsuit by a Peruvian state-owned mining company, which had lost a fortune when silver prices whipsawed, hit the Hunts especially hard. The court ordered the brothers to pay $134 million in damages to that company. Unable to pay such a sum, on top of all their other debts, both Bunker and Herbert declared bankruptcy in 1988. It was one of the largest personal bankruptcy filings in Texas history at the time. It's shocking to think that just a decade earlier, They had been among the richest people in the world. The fall was dramatic. In fact, Bunker Hunt, who in the late 1960s had been estimated to be worth as much as $16 billion, emerged from bankruptcy with less than $10 million to his name. In the world of high finance, $10 million is a pittance, not even enough to maintain the lifestyle he once had. He even had to sell off his beloved 500-horse stable and many other assets. Herbert's finances were similarly devastated. The brothers also faced direct penalties from regulators, fines of $10 million each, and a ban from trading commodities in the future. It was a harsh punishment to cap off a harsh lesson. Yet, through it all, the Hunts remained, in their own way, defiant. Bunker never did publicly apologize for the Silver Saga. To the end of his days, he insisted that he and Herbert hadn't plotted an evil scheme. They were convinced they were simply protecting their wealth in a time of economic chaos. Some folks, especially those in their circle, came to view the Hunts almost as folk heroes or martyrs who were unfairly crushed by the Eastern financial establishment. I heard whispers in right-wing circles painting the Hunts as victims of overregulation and vindictive insiders who couldn't stand that a pair of Texas yokels had outsmarted Wall Street. Indeed, the whole episode raised lingering questions. Were the Hunts criminal market manipulators or just extremely aggressive investors who got in over their heads? The jury, literally and figuratively, decided on the former, but even today some argue the line is not so clear. For me, as someone who was by their side through this drama, the story is a cautionary tale. The Hunt brothers' personal saga had all the elements of a classic tragedy: enormous ambition, initial triumph, and ultimate downfall. They started out as unassuming, frugal men despite their riches. I remember Bunker driving an old Cadillac and wearing cheap suits that sometimes looked 2 sizes too big. They presented themselves as humble, good old boys who ordered chicken-fried steak and Jell-O for dessert, not flashy jet-setters. But beneath that modest Texan exterior, they took incredibly bold risks. Yes, they had some extravagant hobbies. At their peak, Bunker was raising hundreds of thoroughbred horses, and Lamar owned an entire NFL football team, the Kansas City Chiefs. But the Hunts truly believed they were on a righteous path to protect their family wealth and perhaps stick it to the elites back east. In the end, however, they flew too close to the sun. Silver Thursday became a part of financial lore, the day 2 brothers nearly broke the market. It showed the world just how precarious things can get when a few players amass too much power and irrational exuberance takes hold. For the Hunts, it meant the end of their fortune and influence. I visited Bunker years later after the dust had settled. He had managed to recover a little bit financially, ironically by going back to what he truly loved: oil and cattle and even horses. In a reflective moment, Bunker told me, "I wasn't trying to hurt anyone. I just figured silver would be worth more in the long run." Perhaps that was true. But as their story shows, cornering a market is a game that can implode spectacularly. And on Silver Thursday, 1980, that's exactly what happened to the Hunt brothers and their extraordinary days of silver and speculation.